Okay, hope everybody's enjoying the weekend. Today is May 31st, 2015. In this video, we're going to talk about a little bit about deception, how the market deceive a lot of the market participant. But first, let's go through the index. And on the screen right here, on the screen in front of me here is, the Dow Jones Industrial. We see that the Dow Jones, ever since that it made the new closing high on May 19, it's just been heading down. And that's not a surprise to many of us because we have seen that, and it was alerted to us that it was a unconfirmed high, and we basically is looking for some sort of a turning point from that day on to either put in some sort of correction. We don't know how deep this correction will be, and we will find out in due time. But for now, it's basically until the posture of this particular market has changed and reversed back to really show up that there is strength to propel the market to a new high, then we basically have to be remain cautious. So right now I'm looking at this trend line here to see could it hold this trend line. It's really nothing that significant other than some pivot level maybe around here. But really I'm looking at it to come down and test this 17,826 area. So if we do get a bounce, then you'd have to show some conviction that it could take out the current all-time closing high and really push through with some strong market breadth. And also we're looking at the S&P 500. Let's go back to the Dow Jones before we move on. Also, the other thing that I want to show you is the weekly chart here. And if we take a note at that, and we see that weekly chart, although it's not an ideal evening star type of pattern, but it is similar to it, and I call it evening star light pattern. So we see this little, inverted hammer or a hangman on the top, and then we got this little bit of a doji or shooting star in R7. Then you got this gap down candle. So that basically gives us a little bit of a bearish sign here. So we got to pay attention to that. Although a lot of people say the candle is not a nonsense, but it is a reflection of the emotion in the market. So you just have to either accept it or just kind of what I say poo-poo it. So anyway, but it's your prerogative how you want to use these information. I just want to point that out. Okay. So, and then want to take a look at the S&P 500. S&P 500, it did not confirm the Dow on May 19. Then 2 days later, it want to be the king and try to make a new high. So it closed at a new all-time high without the Dow Jones following. And that was primarily because of the bounce from Apple that actually pushing it up. So, again, it's the deception, right? All it takes is some, big heavy weighted stock, and you just move that one particular stock, and then you push the index to show whatever the machine wanted to show. So again, ever since that particular high, you can see it kind of pull back. Although it's trying to make a low valiant effort to try to get back up to the high. But again, I'm looking for this thing to come down, maybe test down, come down to this trend line. Basically, I'm looking for this 2080 if it's going to come down and see how it's going to hold up near that 2080. Now, a lot of people is looking at this, 2120 level. So people are still looking for this thing to move back above that level. And again, just like the Dow, if it's going to come up and make a new all-time high, then you have to show some conviction and some strength. And right now, the breadth of the market is not that strong, although it's kind of trying to deceive a lot of the participant. But if we look deep enough, one could see that there is there are a lot of weakness built in on the market right now. So one just have to be really cautious. So again, basically looking at that, and if we go and take a look at the weekly, we probably also see, well, I got a little bit of a scribbling on there, posted a chart on there to say. So again, you see this little bit of a, like an evening star type of pattern. Okay, you got this little shooting star, hangman doji, hangman kind of candle here, and then you got a down candle, even though it didn't gap down. But, one have to be cautious about the follow to on the downside with this type of a pattern. Okay, so, and we go back to the to the daily here and take a look at the transportation. A lot of people start talking about the transportation, about the Dow theory and all those stuff, but really what they have missed is not here that we get a non-confirmation from the Dow theory, but basically we got it back here somewhere around when the Dow made the first unconfirmed high back here on March the 2nd, because you look at the March 2nd here, this is the Dow high here, and then we go back on the transportation. You look at the March 2nd on the transportation. Let me see, this is right here on this particular day. So you can see this close here is much lower than the December 29 all-time closing high for the transportation. So that is the first sign of unconfirmed, Dow theory closing high for the Dow, and it's not here. Okay, it's not on the May 2nd. I mean the May 19th. Okay, that is not it. On the May 19th, when I put out, I said, was watching that closing high with negative breadth. That is really concerning. When you see something like that with a negative market breadth pushing a index to a new record high, that tells you that it's only a very small minority of the stock is lifting the weight to push that market up. Okay, so those are little subtlety that we need to watch. It's not the trend. The trend. When the trend become obvious, then it's no longer something for us to watch anymore, because we already know where it's going to go. Right? It's that the preparedness of knowing that the trend is about to change is the key. Not saying that we have confirmed a confirmation that the trend have changed. Okay, because I will show you that majority of the stock will, retract it a lot by the time that the trend is obvious. Okay, so and here's the Nasdaq. The Nasdaq is being pushed up last week simply because of the semiconductor, because of the big merger announcement between Broadcom and Avago. And usually, you can see this. The other thing to watch is typically, see a lot of the CEO, the executive of a big corporation, right? They typically buy near the top. They buy a company near the top. Who would, you name a CEO that go buy a company that is in distress or when it is on the low. Okay, they usually buy them at the top or near the top, and for $37 billion for Broadcom, very good luck to them. Okay, so and so this pushing up the semiconductor, and a lot of the semiconductor, the whole sector, thinking that everybody's going to buy each other out. That's not the case, because a lot of them have overlapping product, and and there's no synergy there. Okay, everybody is fabless now. A lot of people just go use TSMC or Global Foundry or somebody to fabricate their wafer. So there's already consolidation in cost by that point on there. Okay, so it's not that simply just because somebody want to buy this, then everybody's talking about buying each other and that sort of thing. No, most of the executive, they are not that brave to go and make those type of commitment. So and here's the Russell 2000. See, again, after the Russell 2000 made a high here at April 15, okay, on tax day, it just kind of retracted, and I've been pointing out this possible head and shoulder pattern that we got to keep an eye on. Okay, so when this thing break this 1208, then most likely we can probably see it come back down and retest this December pivot low. So those are the things that to keep an eye on. And so let's go and take a look at, again, go back to the Dow. We're saying that here's the Dow making a new high, and it's still pretty much, near the high. But then again, let's go and take a look at the 30 stock in the Dow quickly, just kind of briefly. Okay, here's Apple. Oh, by the way, for those that want to see some of the chart that I have posted on earlier on Twitter, such as Apple, Facebook, Amazon, Netflix, go to my Twitter stream and check out the chart there. Okay, so I just posted some updated chart earlier. So you can see Apple, you got this little push here. It's still trying to make it back up to this 133. And we got this little coiling effect on the inside day. So we'll see, can it break to that 133? But again, you see that Apple did not make a new high, when it was on, was at the May 19, when the Dow made a new high. Okay, but even on May 22nd, it did not close at a new high. Okay, and let's take a look at American Express. You see, American Express is way down here, and the previous pivot high is way up here. So you can see that it's far away from the recent high, and Boeing is coming down, declining. Right? If you buy this definition of a downtrend with a lower low, lower high, right? Here's the lower high, right? Lower high, lower low, lower high, lower low, lower high, and it's in the process of making another lower low, right? So, and here's Caterpillar, right? Cisco, although Cisco is trying to get up to a new high, right? Here's the recent high is made back in March the 2nd. That was the first time with that unconfirmed Dow theory high by the Dow Jones, right? So, and here's Chevron Texaco, right? It's way down in the mud here. Here's DuPont, right? Okay, here's Disney, right? We're forming a little bit of a head and shoulder possibly, okay? But again, it did not make a new high recently, along with the Dow Jones on May 19. GE trying to, but it's not up here, right? And Goldman Sachs did. Remember, I did put out a post saying that the next catalyst for the market to hit a new high is most likely the financial, which we are seeing a little bit of a pop from the financial. Goldman Sachs made a new high. Home Depot did not, right? Here's the high. Okay, IBM is trying to recover, although it's pretty, heavily price weighted. So it kind of pushed it down up as it, recover from its low on this inverted head and shoulder pattern. And then Intel, the semiconductor sector is pushing it. Watch this candle. Might not be that good looking here, right? It's basically bumping up against the resistance. Wouldn't be surprised to see it pull back. And then here's Johnson & Johnson, right? And here's JP Morgan got a new high, right, on May 19th. So it helped push the Dow to a new high. And here's Coke, it's not doing well. Here's McDonald, right? It got a new high on May 19th. So we got three stocks that make new high on May 19th to help push the Dow. Okay, 3M did not make new high. Merck did not make new high. Okay, Microsoft, well, it did not make new high. It made a new high up here after a post earning, a couple of days ago, prior to that high. Okay, and there's Nike. Right? Nike did not make a new high the day before it did, I believe. Well, it could be the high is here, the closing high. So we could get that benefit of the doubt to say it helped. Okay, here's Pfizer, did not make new high. Okay, Procter and Gamble, look at that, right? Downtrend. Look at this. He's still waiting for the Dow to turn down and make the trend, the downtrend to be obvious. Just imagine where this will be. Okay, here's Traveler, right? No high, no new high. United Health, okay, did it get to a new high on the 19th? Maybe. Let's see here. Didn't, but the May 20th, it made a new high. So that's probably helped, push the S&P a little bit maybe. Okay, United Technology, no new high. And Visa, okay, Visa got a new high on the 19th. All right, so that helps. So another financial. And Verizon, no new high. Walmart, look at this, right? It's on a downtrend. And then Exxon, same thing. So there you have it, right? Well, how many stocks do we have? 4? Or was it 3? I think it was 4, maybe 4, 5, possibly 6. Right, 6 out of 30 that actually made new 52-week high to help propel the Dow Jones to a new record closing high. So there you have it. That's the deception. So if you were to look at the amount of stock that is advancing and declining, you can also see that deception of how the market is getting weaker. So good luck to you next week. Just thought I'd share that little observation with you, and maybe you might want to take a look at your population of stock and gauge the strength and weakness of the what we call the breadth of the market.